Here's the news roundup this week as of Saturday, May 31st, 2025. I made a video like this last week and asked all of you if you enjoyed that format and got so much positive feedback. So I'm going to keep doing these, and they're probably going to be on Saturdays. They may not be every single Saturday, but at the very least, they'll be every other Saturday. As always, I respect your time, so I'm going to keep this short and sweet and keep it to the highlights of what's happened over the last week. And I'll give you a little bit of my analysis and opinion so that you can be more well-informed and so that that makes you a better investor. In this video, I'm going to talk about two very important things that have been happening that are definitely going to help shape the stock market moving forward. First, Japan is struggling hard, and now Germany is the world's top creditor. This is important because we're in major debt as a country, and so this has major implications on Wall Street. The second, and even more incredible news, is the fact that the courts just ruled against Trump and his tariffs, effectively canceling them, or did they? This is huge. My name is Nolan Govea, my students call me Professor G, and I made this channel to make investing simplified. So first, Germany reclaims its title as the world's leading creditor. Germany's reclaimed its position as the world's largest net creditor for the first time since 1991, surpassing Japan in global investment capital contribution. This shift, influenced in part by exchange rates, highlights underlying issues such as aging populations and low domestic investment opportunities in Germany, Japan, and China, the top three creditor nations. While Japanese investors make up the single biggest group of overseas investors in US government bonds, Europe was the source of $7 trillion of overseas equity investment since 2012. The Japanese market is going through a lot right now, and it actually affects the United States more than you think. And so if you're bored, look up this idea of the carry trade and the fact that it has been unraveling. Very important stuff, but too much to highlight in this video. Amid growing tensions over trade and currency policies, the US under President Trump seeks to correct long-standing imbalances with tariffs and a weaker dollar policy. Meanwhile, Germany's recent domestic fiscal expansion and increased European capital demands may redirect savings inward, posing risks to Wall Street, especially considering European investors' major presence in US equity markets. With the US-EU trade negotiations intensifying, the future of Germany's creditor status hangs in the balance. As you know, we as a country are in major debt, and so whoever owns a lot of that debt is very important to us as the United States, and also it's important for us to understand what's going on in their economy to make sure that nothing's happening too shaky over there. Now on to some huge news with these tariffs. The US Trade Court blocks Trump-era tariffs. On May 28, 2025, the US Court of International Trade ruled that President Donald Trump exceeded his authority by imposing broad tariffs under the International Emergency Economic Powers Act, IEEPA. The court determined that the IEEPA does not grant the president unlimited tariff-setting powers without congressional approval. This decision blocked the Liberation Day tariffs, which included a general 10% duty on all imports and higher rates up to 50% on goods from 57 countries. The ruling emphasized that while the president can impose tariffs under certain laws, such as the Trade Act of 1974, these powers are limited in scope and duration. The court found that the IEEPA lacks the specific conditions and limitations necessary for such broad delegation of tariff authority to the executive branch. In response, the Trump administration filed an appeal, and on May 29, 2025, a federal appeals court granted a temporary stay, allowing the continued collection of the contested tariffs during the appeal process. The administration argues that the tariffs are essential for national security and economic stability. So in essence, we're still in for a huge pot of uncertainty. This is why the stock market hasn't reacted super crazy. It was up a little bit and then down a little bit. As soon as we get definitive certainty either way, I believe the market will move, but as of right now, we're kind of all at this feeling of sitting on the edge of our seats, just waiting to see what is actually going to happen. Financial markets reacted positively to the initial ruling, with US stock futures and the dollar experiencing gains. However, the temporary stay introduces uncertainty, and the situation remains fluid as legal proceedings continue. The outcome of the appeal will be pivotal in determining the future of US tariff policy and the extent of presidential authority in trade matters. Like I said, the stock market is waiting to see what is real and what's actually going to happen. After this short clip, I'm going to show you a couple of sectors that could absolutely be affected by this and some actual companies that you could invest in. And in this clip, Tom Lee weighed in on what's happening and has a couple of ways that you should invest.
The visibility on tariffs has gotten messier because now we have the judicial system weighing in on what can be done and the response from the White House. But because I think the scope of what can be accomplished with tariffs has actually shrunk, it means when we think outside the next couple of months, I think that ultimately it's pushing us closer to a resolution, because now the bid ask between like what other countries might accept versus what the White House is trying to achieve is actually shrinking. And that gets us closer to the end game. So I think this is actually a net positive for stocks. And I can understand why markets are confused, but to me, I think the equity risk reward is still better today than it was in February 2025 when the S&P was at its old highs.
How do you think about what the rally might look like between now and year end?
Well, I think that when markets really believe the tariff sort of story and saga is behind us, I think it's going to be a very big cyclical rally. So I'd be expecting industrials and financials and tech, especially the washed out tech, which includes the Mag 7, to really lead. But I also think that would include small caps, because small caps have really been hammered by all this economic uncertainty. And so once that visibility returns, and then we think about 2026, and that's probably when the Fed is, more dovish than they are now. That's a tailwind for risk assets. So I actually think, weakness here should be bought, and I'd still be buying dips.
I'd agree. I'd be buying the dips too. And I am. The potential winners if the tariffs do get blocked are as follows. In technology, it would be lower component costs and more exports. So Apple, Nvidia, AMD, those would all be good examples of companies that could do better. In industrials, there'd be better margins on inputs and machinery, so companies like Caterpillar and GE. Consumer goods, cheaper imports, higher profitability, so Nike and Procter & Gamble. For retail and e-commerce, lower import tariffs from Asia, so Walmart, Amazon, and Target. And then in the automotive industry, cheaper foreign parts, better global pricing, so Ford, GM, and Tesla. I've been saying it all along though, the thing to really watch out for, the thing that's gonna give me a clue that we're actually in a bull market and we're out of this uncertainty and even out of this possible recession scare, is looking at the Fed rate and specifically watching for 2 consecutive cuts from the Fed rate. Until we see not just 1 cut, but 2 consecutively from the Fed, we're just in this world of uncertainty, and we're just gonna have to figure out and watch out for what happens next. The way to invest through uncertainty though is definitely not to hold all of your money off to the side and just kind of be very scared with it, because absolutely inflation is eating that money. So what I'm doing is dollar cost averaging through this time into very solid ETFs and mutual funds that are broadly based, that have low fees, and that have data to suggest that they've made it through something like this over and over and over and have come back stronger every single time. Check out this video here to see exactly what I'm investing into with the bulk of my portfolio, or watch this video to keep you going strong in investing. And remember to keep investing simplified.